Welcome, my friends, to another edition of the Heritage Wealth Planning YouTube channel. Today is going to be part 5 of our 5-course tutorial, if you will, on various investment firms' online programs that they have for self-directed investors, i.e. you give them some information, they spit back a recommended portfolio for you. Or if you want to use their financial advisory services or personal advisory services or whatever they call them, robo-advisor, digital advisor, where you're paying a fee. And they take it from there from you. They rebalance the portfolio, they implement all that. Some of the firms allow you for a higher fee to talk to somebody. Some of the firms they don't have anyone to talk to. It's just a smaller fee. And today we're going to use Schwab. And I'm looking at the Charles Schwab. I haven't been on the Schwab website for quite some time as an individual investor, so I'm literally going blindly. So you're going to watch me as I kind of manipulate through this myself. Well, hopefully I do. And we're going to see what they offer here. So let's start with Schwab. Real quick, I am going to add a 612. It's going to be Betterment. I'll probably do that maybe today. If you see me, I'm in the same shirt. That means I did it after this episode. Tomorrow, either way, I'm going to have a 6 edition because Betterment is pretty well known for their robo-advisor, their digital advisor platform. And I want to see what their ease of use is. So we're going to give them a shot tomorrow. But let's go with Schwab. Just for the record, I worked at Schwab from 1999 or 2000. It wasn't long, actually, about 8 months. And then we moved back to Virginia from Phoenix. I was in their Camelback office in Phoenix. My wife and I, and we just had our first child. We moved back to Virginia. And right about 2 weeks after we moved, Schwab laid off a lot of people because that was right at the beginning of the 2000 market crunch, and it didn't come back for a long time. So Schwab has definitely repositioned itself, and I think they've done a wonderful job. So they're doing real well. I'm a fan of what Schwab is doing. I just think they're a good organization, top down for sure. So let's see what they offer. So again, I want investment advice, either on my own where they tell me a good portfolio recommendation, I can just implement that, or I pay them a fee to do it for me. So look, you see investment advice right there. A couple of things to remember. Schwab is unlike the other firms like Fidelity and Vanguard, T. Rowe, and then USA. Yeah, all those other firms are mutual fund companies. Schwab is literally a brokerage firm. It started off selling stocks. In fact, Schwab used to be in Sears a long time ago, and they said stocks and socks, or socks and stocks, I think it was. You go to Sears, buy some socks, and you also buy some stocks with a Schwab financial advisor. As silly as that seems, is true, but that was individual stocks. They didn't have mutual funds because they got commissions on the sale of you purchasing a stock, and that was their business model. So that's how far removed Schwab has come. But the issue is on their model portfolios. I even wonder if they even have any. So because they're still a stock company. I mean, again, they have funds, they have ETFs, all that, but at the end of the day, Schwab business is still is brokerage firm by and large, and it'd be interesting to see what they offer. If they offer funds, because I can't imagine they say you should have 100 shares of GE and 50 shares of Amazon. That'd be way too risky and way too volatile. It'd be tough to imagine that, but let's see. All right, so Schwab Intelligent Portfolios, dedicated financial advice. Schwab managed portfolios. I don't know any of these things, so let's just start over here. Oh wait, let's do this. Compare our intelligent solutions. Let's see what this is all about. Compare our intelligent solutions, because I like intelligence, and everyone's always smiling. That's good. Schwab Intelligent Portfolios, you get portfolio management, diversified portfolio of handpicked ETFs, tax loss harvesting, daily monitoring and rebalancing when needed. Okay, so Schwab Intelligent Advisory gives you all this other stuff to go with it. Personal action plan and portfolio recommendations, probability of success, planning and tracking tools and whatnot. Both give you 24/7 access to investment professional, portfolio review with a planning consultant who is a CFP, partner with a planning consultant anytime, plus an annual check-in. All right, so it looks like it looks to me it's going to be kind of like the Vanguard, not the Vanguard. This would be kind of like the Vanguard thing where it's 35 basis points and you get a certified financial planner on top of that. This is going to be kind of like the USA one, the robo-advisor, digital investment advisor, where you kind of do it yourself. And I think you can call in whenever you need, but you're pretty much doing it on your own in terms of implementing it. But then they're going to take it for you. So they'll manage the portfolio for you, but you don't get any active ongoing advice. Looks like on this side, this intelligent advisory you do, but partner with a planning consultant anytime with an annual check-in, portfolio review with the planning consultant. But I think that means you got to make that call. They're not going to schedule. They're not going to do any outbound calls or anything like that. Wow. Whoa. Okay. So this is exactly what I was looking for. So remember, we're starting with a model of a guy or lady who's got $50,000. No commissions, no account service fees charged, minimum investment $5,000. Advisory fees $0. Huh. That is, well, let's dive into that. That's impressive. I just wonder what the fees are internal of their investment. So, I mean, that sounds great. No advisory fees, but if they're charging 2% a year for ETF fees, that won't be so good. I can't imagine that'd be the case, but let's find out. Low 28 basis points advisory fee. They got a little thing here. So let's see what that is, an asterisk. And their asterisk says, if you are not completely satisfied for any reason, we will refund any eligible fee. Okay, so that sounds pretty good. I mean, but I'm going to click on this 28 basis point thing. Pay just 2.28% of the assets in your account, excluding cash. Larger portfolio benefit from our fee cap. That means a typical investor who grows his or her assets beyond 1.4 million will pay no more than $900 per quarter. And let's see, $900 times 4, that's $3,600 on a $1.4 million account. That's 25 basis points. Man, that's pretty good. So 1.4 million times 0.025%. Yeah. It's going to be tough to beat that. That's a fact. Now, charge no commission, account service fees. Schwab affiliates do not earn revenue from underlying assets, blah, blah, blah. Okay. That's we'll see. No, okay. So that's a pretty good deal. Learn more. I mean, again, I don't know the plan, but if it's 28 basis points on the, and the max you can pay is $3,600. See, am I getting that right? So 1.4 times 0.25% equals, 25 to 26 basis points. All right, so here's the investment. Which one did I do? All right, so I did, I'm going to close out this guy because I can't remember which one I did. So I want to go to learn more on the intelligent portfolio one. This one, they don't charge any fee, pay $0 advisory fee, account service fees or commissions. You can get started with a little $5,000. Get portfolio recommendation. Let's see what they can tell us here. The industry, my goodness, it is changing remarkably. All right, so let's get started. Schwab is automated. Okay, automated. That's a digital advisor, aka robo advisor. Basically, you're sending them some money, you fill out some risk tolerance questionnaires, and they do it for you. I like that, actually. All right, charge no advisory fee. Schwab affiliates earn revenue from the underlying assets in the account. This revenue comes from managing Schwab ETFs and provides service relating to certain. Okay, so basically, the ETFs in the portfolio are what pays Schwab for this asset management. Let's just see what it says. I'm going to prepare for retirement. Okay. Next. All right. What is your understanding? I say I have good understanding of stocks, bonds. Next. So far, so good in terms of ease of use, I got to say. What would happen? What's your first thought that comes to mind for risk? I understand it's an inherent part of the investing process. I'm trying to keep everything similar to what I did with all the other firms we did, trying to get roughly a 70-30 portfolio mix. I have experienced a 20% decline or more in my portfolio in a year. That's true. 2007, 2001, and 2002, I did that. 4 times. What did you do? I did nothing when I experienced that. I just let it be because I knew going in that the markets fall 20% or more once every 3.5 to 4.5 years. How would you describe your approach to making important financial decisions? I'm confident make decisions and don't look back. It's pretty much to my wife's chagrin. Because I'm a little bit, what's the word? I'm not even sure what the word I'm looking for is, but not as thoughtful as she would like. Let's put it that way. So that's okay. I'm going to say I want $50,000 to get started. Impulsive, that was the word I was looking for. How much value fluctuation would you be okay with 1 year from now? Well, let's say 20. There we go. Yeah. How much I'm not going to contribute? How many years? Okay, good. 25 years. So basically, let's see what they say. I like, so far, I gotta say I like it. I mean, if they got no account fees and oh man, it's not going to print me out my. Looks like they want me to open an account. I don't want to open an account. Okay, so I was just hoping to find out what their be. I wonder if they'll give us a model. Disclosure brochure. Yeah, let me see. Diversified portfolio handpicked. Yeah. Well, they're not going to give us a model, I don't think. Let me just look down here. Disclosure brochures. I'm going to assume that they're not going to give us a model here either. Let's see. Selection ETFs. Okay, there we go. Let's see what they got. Services, advisory, business. All right, selection ETFs. Schwab is selected. Okay, so it doesn't really tell us what the model would be. My inclination, guys, because I know a friend who's in this, is that it's pretty well diversified. He says Schwab ETF. Actually, I wonder if we can see what the Schwab ETFs are. So bear with me. Let's just find out if we can find out what the. Let me go here. Let's find out if we can find out what the Schwab ETFs are. And let's go invest. Because if we can find the retirement, let's go to invest here. And index funds and ETFs is exactly what we want. So my inclination is that Schwab is going to have their ETFs in there. And that's going to be pretty cheap. And the reason I say it is because my understanding is that Schwab ETFs are very cheap in terms of expense ratio. Here we go. Here's Schwab. Okay, this is perfect. So now available 3 new low-cost ETFs with no minimums. Yeah, Schwab is really whoa. 3 base. Whoa. Here's their portfolios right here. So you're getting the Schwab advisory portfolio for 3 basis points, roughly. Let's just say 5, because some of their other stuff is probably a little bit more expensive. Now, my buddy said they keep about 7 to 8% in cash. That's probably how they're earning their fees, that they're using your cash and they're loaning it out to people on margin, almost like a bank does. You put money in a checking or savings or a CD account, you get 1%, the bank loans it out at 5%. And frankly, you don't really care as long as you get your money back and it's liquid. My presumption is Schwab's doing the same thing, simply because I think they keep like 7 to 8% in cash is what my buddy was telling me. And that might seem like a drain on your overall portfolio, but let's just say you got 80% stocks, 10% bonds, and the rest is in cash or something like that. That's still a pretty aggressive portfolio. Yeah, your cash doesn't do anything. I get that. But that's your fee to get in, essentially. And that's, you could turn around and pay, somebody else was a Fidelity 0.6 to 1.7 and they're still going to keep 2% cash simply because that's how they earn their fees. That's how they take their fee. All the advisory accounts have cash. So the Fidelity, the USA does, they keep 2 to 3 to 4% in there. Now they're still charging roughly 1.8, all in. So if you got 2 to 3 to 4% in cash and they're still charging 1.8, and Schwab's going to say, forget all that. We're going to keep, basically, let's say 8% in cash, and we're not charging you anything as an advisory fee. And the fees that you're paying internally are 0.5, 0.05, not 0.5, 0.05. Ooh, that's tough to beat. That is tough to beat. And no cost with no minimums. Man. So let's see what this other one is. That's going to be tough to beat. All right, let's learn more about the advisory services that they have here. Now, this is where you have a guy or a lady you can talk to on a regular basis. Robo advice made better with unlimited guides. Now, I got to say, the guidance that Schwab is doing, that Vanguard is doing, it's investment guidance, my friends. It's not financial planning guidance. I cannot stress that enough. And I got no problem with it. But you're just not going to get full-fledged financial planning. They're just not going to do that. So let's just remember it is 100% investment guidance. So that may or may not be all you need. I don't know. But here's the way I look at it. You should hire a financial planner like me and pay that guy or that lady a retainer fee of, I don't know, a couple $100 a month, and then turn around and use a Schwab portfolio, not this one, but the intelligent portfolio we just looked at. You just can't beat that. My goodness, you're getting the best of both worlds. You're getting a real live financial planner, not some investment consultant. You don't need that anymore. On top of that, you're getting Schwab rebalancing, doing all this grunt work for you in a most tax efficient manner for basically 5 basis points. All right. So just because it's a CFP professional, this is my problem, is they're not doing financial planning. They're doing investment management. Again, there's nothing wrong with that, but it's not what I do. And I know that sounds like I'm, toot my own horn, but it's not. However, with that said, so this is just like Vanguard's thing. You're getting, where Vanguard charged 35 bips, Schwab's charging 28. So basically a little bit more than a quarter. Vanguard's a little bit more than a third. Same kind of minimums and whatnot. Almost the exact same thing as what Vanguard's doing. I wonder if it tells us what their model portfolios are. I have to feel that the model portfolios are going to be the same in terms of diversification. I can't imagine it's not the USA one was poor, no other way around. Everyone else is right. I would be stunned if the model portfolios weren't the same. How much I pay in fees? I'm just trying to see if their portfolios. How do I create my intelligent advisor at a glance where I saw that? What paying fees, what does it mean, strategic. Let's just see what they offer here. Yeah. All right. So I have a feeling it's going to be right here. What types of account? What's the difference from Schwab advisor built in right here? Portfolio. All right. You'll get a diversified portfolio composed of low cost exchange traded funds, all handpicked by the Charles Schwab Investment Advisory. Portfolio generally includes up to 20 asset class across stock. You just fixed income, real estate, commodities, as well as an FDIC insured cash component. Now, a lot of people, and I did too initially. I said, they're having too much cash in there. There's a guy named Craig Israelson, and off the top of my head, I can't remember what firm he's with, but it's 712. He did this analysis. I've been a big fan of Craig Israelson for a long time, where he says we have 12 asset classes, each with 7% of the portfolio. And that portfolio just smoked all of the portfolios out there. I mean, just smoked it in terms of the downside risk mitigation on top of the overall performance over time. I bet Schwab's doing the same thing here because they're using 20 different asset classes, probably not 7% each. But cash is an asset class. Cash is an asset class. So they're keeping 7% of the portfolio in cash because they're using it as an asset class. And that's for 28 basis points. You get to talk to somebody. Man, I tell you, that's a smoking deal. Schwab, unlike Vanguard, also has offices around. So if you really need to get, see somebody in person, you can. Schwab's good company. If you're just doing investment management, my friends, and you're a professional, I don't know how you can compete with this. This is fantastic. So I'm in. I like it. Big fan. I don't know what their performance is. I frankly don't care. Performance and indexes are going to be performance across the board. You're not getting any better or less other than the fees you pay. That's all there is to it. So the Schwab performance will be just as good as the indexes they're in, minus their tiny, tiny little fees. So, this is good. Of all the ones I've seen, by far, this is the one I like the best for sure. So I guess I'll wrap that up there. Hope you like this. Give me a thumbs up if you have any experience with Schwab or any of the other ones. I'd like to hear it because this is of interest. But, Vanguard and Schwab, they're competing with each other, and that's capitalism right there, man. Capitalism. They're competing for your dollar, and it's not lowest cost denominator. They're not doing that, or lowest common denominator by hitting the lowest cost. It seems that way, but at the end of the day, they're setting the rest of the investment world on notice that the days of 1.7% investment advisor fees are over, and thank goodness. It's ridiculous that people pay that much and expect to get outsized returns. It's the exact opposite. The higher fee you pay, the lower returns you can expect. It's negatively correlated. There's just so much study on that. It's not even debatable anymore. So good kudos to you, Schwab. Chuck, call me Chuck. Kudos. You're doing the right thing. So, and Vanguard's doing well too. The Fidelity one I saw yesterday was fine. USA, the robo-advisor, T. Rowe Price was fine. Their fee is a little bit higher. They all have good offerings, but of the funds I've seen so far, man, Schwab's going to be tough to beat. So I'll give it one more thing next time with Betterment, and then I'll give you a wrap up, which one I think you should go with. Okay, we'll see you next time on the Heritage Wealth Planning YouTube channel. Thanks, guys.